It's called Seeking Alpha.
So seeking alpha, yeah.
It's brilliant. It's free and it works. And yeah, they're probably annoyed because of my VPN. Was this to ensure there's up in the future and with JavaScript to your browser? Yeah, okay, whatever. Just click the link, bro. It's fine. Gentlemen, ladies, comrades, welcome to episode 16 of the Quamfy Show. Back in English and the new programming. Today we'll be having a look, warming up here, at investing versus trading. We're gonna have a look at, given that the Quamfy Lifestyle will eventually become a thing, these prices is we're, we're not quite there yet, but eventually there will come a point. We believe that there will come a time when people want to secure their assets and maybe diversify a bit. So there's a couple of ways to do this. Same as that there's a couple of ways to acquire your initial wealth. And we'll be touching on this. So it's an investing versus trading and Warren Buffett's rules of investing episode. It's going to be pretty interesting. We have some things on the ready, and could become a spicy discussion because not everybody agrees on everything. But we'll throw our take out there, and of course, we'll have a look at the quant price crypto market and where we are going, or at least where we are, because where we're going, no one knows. Oh no, what was the saying? We don't need cars where we're going, something like that. Anyway.
Yeah, it's from Back to the Future, right?
Yeah.
Uh,
Gilbert used that quote actually in where we're going, we don't need roads, doc, something like that. Anyway,
wait,
Tim, you
yeah,
were in
yeah.
Ireland. You're back.
I was. I'm googling. We're going to. Yeah, but it's where we're going. We don't need roads. We're going Back
Oh,
to
we
the
don't need
Future.
roads. That's it.
Yeah, well, I was in Ireland indeed. Well, I'm still kind of ill. So I came back last Wednesday. Currently, it's Tuesday, the 19th of September. So I came back on the
Yes.
13th. I'm still kind of struggling with the fact that I'm still ill. Because I did a lot of things in Ireland. When you were recording the Dutch episodes together with Bas and Niels and talked about SATP and the tech behind Overledger. I was actually enjoying Ireland. I was there obviously for the game of Ireland against the Netherlands on
Who
Sunday.
won?
We did the Dutch team won.
Nice.
It won 2 away victory. And actually, I was actually on television. You could see me. The cameras actually turned towards me right after they scored a goal. So you see me celebrate as soon as
In the Lions
the
suit again?
yeah, exactly. Yeah. I was there. It was,
Savage.
yeah, it was. But it's kind of for me, the football is kind of a detail of the entire trip. So on the second day we came in on Friday during an Irish heat wave, it was kind of pretty warm there. I mean, in the Netherlands it was boiling. It was 30 degrees. And we came to Ireland. I expected it to be a bit colder, but it was still like 25, 26 degrees. Well, you have the travel day, so you're kind of really tired on the first day. On the second day, I met up with Andy and Steve, Patrick or Steve. Oh no, this is. I drank. Oh, this is really
I am
embarrassing.
not cutting this out.
I'm
You're
gonna
digging
blame
your
this
own
on the.
grave.
Oh, this is really embarrassing. Um, oh no. Anyway, I think the Guinness hit me. So basically, Andy, a comrade from Ireland. Well, we were in contact. because he also obviously follows the Irish football team, and he knew that we were playing against each other. He also knows that I follow the Dutch team wherever we go. So already back in March, I think of this year, we were talking about, hey, you'll be coming, if you're coming to Ireland, we should meet up. Then we didn't talk for a long time until quite recently before the game. And then I was like, okay, what are we gonna do? The usual. How are you gonna meet up? And well, the weather was really nice. So it was like 25 degrees in Ireland. And they said, well, you can come to the little town where they live, Bray, well, it's kind of south of Dublin, like 15 minutes by train. And we just met up in well, one of the pubs there. We visited two of them, and it was kind of Irish drinking. So you start at like 5 p.m. You don't eat. You stay there. You drink and you drink and you drink, and it's suddenly it's 11 p.m. You need to take the last train home, and that was a really nice experience because you're just sitting there and you're with. I didn't know them, right? But they know me. So kind of you're talking to people who know you without being it the other way around, if it makes any sense. So that was a very weird experience.
Yeah. Yeah, I can remember vividly from when I
So
went to Scotland to
yeah,
meet David Dowie, and yeah, we met the dude there. He actually recognized me on the street, and that's pretty similar, right?
yeah, it is. And yeah, we've got a really nice conversation about quant, and then it's so strange to be far away from home, in a strange setting where you don't know anyone, and you're still talking about the same language as you always do. You're still talking about the same, you're using the same jargon, if that makes any sense, right? You use the same Gilbertisms. It's about Overledger. It's about what they do, the vision of the company. All the time we entered the market, we talked about you as well. Uh, it's kind of a shame you weren't there, so we'll have to meet up again.
For
Um,
sure. I
yeah,
love
but
Ireland, man.
yeah, it was just in short a very amazing experience, and
Yeah.
yeah, that we I was there for like 5-6 hours, but it felt way shorter. I really enjoyed it. So thanks again for the hospitality. I really loved it. Um, yeah, and I really enjoyed the Guinness as well. So that's a bit about me. Then no, actually it wasn't. So then the day after we had like the football game. I don't know if you know anything about it, but like the Dutch fans go crazy whenever we go somewhere. It's like we've just built this. It's like celebrating King's Day, but being away from home. And well, all the Irish people they actually loved it. So that was it's very weird to have an orange parade in Dublin. I think the only one that's allowed. I'm not sure if you're familiar with Irish history, where like the Protestants against the Catholics, and then the color orange is kind of. I think it's. Let's not enter here, but the Irish hate the color orange. Has to do with Northern Ireland and the entire history there. But yeah, that was just a lovely away game. The day after it, visited two museums. I visited a museum, did a
Well, the Irish
little boat
Catholic
trip.
tradition is associated with the color green. Protestants associate with the color orange because of William of Orange, the Protestant
Exactly,
king who overthrew Roman Catholic King James the Second in the Glorious Revolution.
exactly. Yeah. So yeah, that then the weather was kind of terrible. It was really good here in the Netherlands. And then like on our final day, we went to the other side of the country, so towards the cliffs of Moher and Galway. So we did this 13-hour bus trip, waking up at 5 a.m. And you're in the bus until 8 p.m. So it was really intense. And then you're traveling back with Ryanair, so you're guaranteed to be sick and miserable after your holiday. And it was exactly my experience. So yeah, that's a bit about me. In short, I really enjoyed your episode in Dutch. It's a shame for English listeners that we did it in Dutch and that it's not kind of translated because you guys were really onto something last week. Maybe you can tell our listeners a little bit about that.
Mm.
Or not. I mean,
Yeah,
it's very technical, so we can't
no,
really explain it, I think.
yeah, no. We really tried to make it simple, keep it simple, going through the architecture a bit. I think we did it in English before, but um, in general, the consensus is just what people expect, right? You have two gateways. those gateways communicate. In between is the protocol, and before that you have a certain architecture, and after that you have a certain architecture. And there was a lot of discussion as to what happens where. Not going to be going into detail. There's no point. Well, yeah, that was cool. And we also had obviously Boss on the show. Who was pretty critical when it came to the actual development facing us, right? As to what is promised or what is being announced compared to what is actually live / going on. I think that was justified. I just think the conclusions that Boss drew, I didn't agree with. I'm pretty sure I didn't agree with the conclusions. I think there's more to it, but Boss and I don't share the same psychology when it comes to those type of things. And he's actually the one that's been hands-on, and he values that very much. So if that is one of the main indicators for a person if something is good or not good, and he expects something to be as advertised, and it is then not, then that's a bummer. And he expressed that vividly.
He did.
Yeah, which was also interesting, and it got me thinking. And I think I agree, right? That
Yeah, I
whatever
agree
is
as well.
facing us, right, the public stuff, is not done. It's not working the way it should.
Yeah,
But I also feel that there's another side to the things, and that's what's being used on the enterprise side of things. And just looking at the testimonials from the BIS, Nexi, LegChain, etc., that has to be logically wise in my head at a far greater, further, more advanced state of development. And to me, it felt like Boss couldn't go there, quote
no,
unquote, anymore. Um, yeah, that just bummed him out. Yeah,
yeah. So without speaking for Boss,
yeah,
just trying to interpret. I mean, I cannot speak on behalf of him. I'm just trying to interpret what he says and then make a translation. So kind of his point indeed is like he's one of the few people who's been hands-on with like Overledger Publics. Well, what's being advertised on X, on the, let's call it Twitter for the sake of let's keep it sane.
simplicity. Yeah,
Simplicity. And they advertise something that
for
works.
nostalgia's sake.
Yeah, for like a product that works and that you can actually engage with, you can use it, it's plug and play. But then once you start working with it, it's just a broken product. And well, Boss has been one of the few people who's actually been hands-on with it, which gives us a unique insight, I think, into what's going on there. And I think he has a very valid point. But then, kind of to extend his critique, is that and it might be true, it might not be true here. Like here, it really comes to into what do you believe, like, right? So do you only take the things for granted that we can actually verify, or is there more to it? And I think Boss is more on the strand of saying, okay, we see Overledger Republic not working as well as it should, and then we should believe, at least like in our investment thesis, that like the enterprise version of it should be this product that is at least working better or in a different stage of development. Let's say, and he kind of takes it to the point where this might actually also just be consultancy, right? Just like a consultancy job of like testing it in certain cases where we don't even know whether it will actually work or we don't really have any signs of real usage. We just can't verify that as properly as we can. That's kind of what he said. I mean,
Yeah.
I'm getting lost in translation here, so don't take me
No.
with a huge grain of salt. But that's kind of where what
No.
he hints at. Like we just can't simply, we cannot really verify it. So how far
Well,
should we trust
I,
it
I
with that?
and after this, we're moving on to the scheduled programming. But
Oh, absolutely. Yeah, yeah.
I think that is BS because in the BIS report, they clearly stated that they had a working product and that Mastercard or no Visa and I forgot all the other names. All those guys, Amazon, they've been working with it. They had been playing with it. They had been. I mean, that is not the way they describe that hypothetical because UST delivered the front end. So what would you be delivering a front end for if it is all hypotheticals and experimental? Yes, it was an experiment, but they were actually playing around with stuff that worked. And that is the case. We know Nexi has been paying and has been operational for a while. Spunta has been operational. There have been plenty of reports for that. So to me, that throws the hypothesis that Quant is merely consulting straight out of the window. I'd
Yeah.
say there's a lot more going on.
I
But
mean,
okay,
yeah, sorry. Yeah, I mean, it could very well indeed be a consultancy job in this case. But that
in what
doesn't mean that
case?
it's like in the case of Project Rosalind, right? Writing report, doing tests. That might be a consultancy there,
Okay,
but it doesn't mean that
the
everything is
the
consultancy here, right? And it
define consultancy.
doesn't make any sense. Just trying to work out what works, like experimenting, demoing. Let's not move this way,
Yeah,
please. I think we should just continue with our
yeah.
program. It gets really
I agree.
difficult here, and I think I'm speaking on behalf of someone who can't speak for himself right now. So that
Let us know in the comments if you want Boss on the show. And
yeah, and Niels, like, we could do this in English,
yeah,
perhaps.
yeah, we'll take a
Anyways,
very big teddy bear as the thumbnail.
yeah. No, anyways, it was a very enjoyable show, also with like the progress on SCTP and what's going on the technical side, because we kind of feel we don't feel, but like we kind of overlook it because I do not understand, right? I'm gonna be
Yeah.
completely honest with you here. I'm not as tech savvy as you think I might have.
I think we actually already have a Boss and Niels on as it, but I'll look at that. If it's in the show notes, it's there. So all right. Because what we discussed here, right? What is your investment thesis? Why would you hold your tokens, buy tokens, or not? Can be relevant, right? Um, in our case, right, if we choose the investing route of things, and it is not as black and white. If we're gonna look at Investopedia, link is in the description. We're gonna use that as our guide rails. I like to make trading and investing very black and white just to get the point across. Oh, and to make everything very clear, I know this is no legal meaning, but we are not financial advisors. We're just a bunch of retards that were very, very lucky buying and finding and buying a token that has very good potential. But we did learn a thing and a trick or two. I was actually looking at starting off with a diversified portfolio before I went into quant, dumped all my profits from there into this. But yeah, do not regard this as financial advice. Do your own research and form your own opinions, right? Everybody has different needs. Everybody has different wallets, different risk appetite, time horizons, and so on. So that being said, let's itchy ear. Oh, pulling apart my earbuds. Really nice. We're gonna have a look at the Investopedia thing, and then we'll make a little discussion out of it because we also have another two topics we want to cover, and we were attempting to keep this episode around an hour. How long are we in, Tim, by in the meantime?
I think we're in for let's see, 19 minutes 15 seconds. So we had like 15 minutes of introduction, which is longer than usual, but I'll take it.
All right. So what you see on the screen right now is Investopedia. Investopedia, in my opinion, is a very nice resource to get what you see here, an overview of topics. You can get a very nice feel for what something means. Generally, the terminology, if you look for a specific term, you can find it on Investopedia, and you can, to a degree, trust what is written there, right?
Yeah,
It
it's a
is,
gem on the internet, in my opinion.
yeah,
You
it's
can
it's
really
it's
find
moderately
everything there.
curated. So it is not like crypto Twitter where every idiot monkey with a keyboard can throw shit on there. Um, so you can use this here. This is fact checked and it is reviewed, which is nice. So if you want to do some research, dive into this. If you don't agree with something, doesn't mean that it's wrong. Yeah, that's for the linkies out there. Sorry, couldn't resist. Use this and the information you find here to do your own research, DIOR, further if you want to. So, investing versus trading, what's the difference? Investopedia says, right, investors generally seek larger returns over an extended period through buying and holding. Traders, by contrast, take advantage of both rising and falling markets to enter and exit positions over a shorter time frame, taking smaller and more frequent profits or losses. The or losses is not in there, but I want to add that because we'll get to that in a bit. Yeah, so the key takeaways: investing takes a long-term approach to the markets and often applies to such purposes as retirement accounts. Trading involves short-term strategies to maximize returns daily, monthly, or quarterly, and investors are more likely to ride out short-term losses, while traders will attempt to make transactions that can help them profit quickly from fluctuating markets. Yeah. So this for most people will be known, right? Tim, is this so? Does this sound familiar or?
It really does. Yeah. You could say that trading is still like investing is long-term trading, but
Yeah, yeah. It's the larger returns over an extended period through buying and holding. To me, that differentiates um, investing versus trading. So looking at quant, right? I'd like to regard myself as a quant investor. I did my research. I know in depth, to a degree, what I'm buying, what it does, why, how it will possibly be profitable in the future. And I have a longer time horizon for this, right? Like, let's say up until 2030 at least.
I
Um,
think to add one thing to it, like I think this, I agree with this definition. I also think like some things get lost in the language here. So, for example, in Dutch, you would have investeerders and beleggers. And the first one would be an investor, and the second one is kind of, you can translate this in English. There's no, I'm not sure. There might be a synonym, but like the first one implies that you actually invest in a company, like that you actually become part of it. And the other one is more like, I'm just gonna throw some money there. I'll let it stand for a while. I'm not
I have to disagree. I think it is both
okay.
the
Then
same
I
the
might be.
same thing. Well, I think what you're confusing it with is investing is buying into a company at a bigger scale
Yeah. Okay. Fair
than
enough. That might
than
also be the
than
case.
what we
Yeah.
call beleggen. Is kind of like speculating. Um, maybe
On a
that's
long term, on a long time frame. Yeah. That might actually
yeah.
be true. Yeah.
So I mean, it's same as English. Uh, the word love has multiple meanings. So you have a lot of different words for the same thing in Dutch. Not really good
Yeah.
analogy, but
No.
um,
But that's the problem with definitions. Like you can't come up with one perfect definition because there are too many.
yeah.
Um,
But in general, even if you go onto
That's
Robinhood
nice.
and you buy fractional shares, you are still buying part of the company. So as long as you buy stocks, shares, whatever you want to call it, ETF, you are eligible to the percentage of X that you own. So if you own 0.1% of Coca-Cola, you are 0.1% holder of Coca-Cola, and you're eligible for the rewards or the losses. No, to a degree of what you own. Um, Still, trading is also investing, and both traders and investors use similar strategies generally to a degree, right? You always want to try and pick the right moment in time, and so we'll get to that.
Yeah,
So
okay.
more long term, more concentrated bets, generally investing, whilst traders are taking more bets generally for shorter term, whilst also trying to get out of nasty situations, while investors just weather the storm. Um, so, um, building a portfolio for investors versus traders could be a pretty big difference. And we'll get to Warren Buffett after we go to price after this. But he generally initially picked larger bets and researched them well and took larger positions. While traders generally um, use more of a buckshot methodology. Not that they don't research, but they are more inclined to generalize, I think, and I'm oversimplifying. So rather look broader than uh, than narrow and deep. So they are aware of more separate interesting stocks, for instance, or cryptos. They make an assessment of the market, and then they throw in money over multiple channels to multiple assets, but just smaller piles. Um, and then be active while while markets are up to capitalize if something gains, or to mitigate losses if something drops. ETFs, stocks, baskets of stocks, mutual funds, bonds. These are all things that we will dive into when we're going in a future episode to asset diversification, because these are all asset classes, not really. Can't find the word right now, blanking, but that you can invest in, speculate on, and some of the things of these things lend themselves, I think, better for trading, others better for investing. This is all information on things you want to consider, right? Price to earnings, fundamentals, etc. And then we come to the investment styles, and this is where it becomes interesting, and it also begins to rhyme with the title of the show. So you have active investors, you have passive investors, and the definitions are actually what you would expect, right? A buy and a hold for the passive, and seeking out particular investments and trying to turn a profit, and then sell them, is more for the active investing. Time horizon we spoke of as well briefly. For how long are you willing to hold something? How deep does your research go? How far does it extend?
What are
And
we? How would we classify
what?
on the type of investor? So if you go up on the page, yeah, we are passive active investors, I think. active passive investors because we
Yeah.
we,
Do you
we
make changes to your allocation of your portfolio regularly?
uh I do on like perhaps on like every 6 months or
Weekly?
so. No, not
Yeah, no,
weekly.
no. Then you're passive.
I'm
I
probably
mean,
passive. Yeah,
if you're active, that would mean that if you see that the market takes a plunge, you are aware and you're actually acting on it.
I'm not. I'm not doing that. No,
In my opinion,
no. But we might be the exception that kind of confirms the rule with our little podcast and everything we do
mm,
to follow quant, but we don't take any action upon it with our portfolios. We just it's
I
just there.
think I think most people also looking at the quant trading and on-chain analysis group, link in the description. I think the vast majority of people are also passive investors, but they're active in a community. They just want to be involved,
Yeah,
but
exactly. So
they're not really acting on what they're doing, right?
no,
Um, this is what they say. They were trying to min max certain benchmarks, right?
yeah,
Um,
some of us are those active
outperform.
investors. Some people in the
Yes,
community are.
if you're an active investor, reach out. We would love to pick your brain because most people we know bought DCA and hold, and it'd be a really interesting discussion, very educational to get you on the show. So
I think they're also kind of a different breed than traders. So like traders are actually just looking at markets and don't really care about what they hold, but active investors are generally more interested like in the fundamentals behind it, will still act upon it.
yeah,
So they
yeah,
might
for sure.
switch narratives. So there's this minor difference which kind of distinguishes
Yeah,
between like the traders among us and like the active investors.
yeah,
But I think for the speaking for the quant community, also our listeners, I think the vast majority are passive investors. We just
yeah,
see it, we take it for granted, and we're Quamfy.
yeah, yeah, yeah. And here, when it comes to time horizon, they speak of more than a year for buy and hold is um, generally the investing type, um, like waiting up to your retirement, stuff like this. Um, oh yeah, this is also interesting. Investors often enhance their profits by compounding or reinvesting any profits and dividends into additional shares of stock. And that is what more people do with the staking right in crypto. Um, People stake, for instance, their check D or whatever, and they do that in a pool, and then their profits automatically get reinvested. So you get the compounding interest going on top of your dividends reinvested or your
Yeah,
interest. Um, Still passive, and that's actually what I'll be eyeballing for the future. Later, we'll get to that. So trading involves more frequent transactions. Buying, selling of stocks, commodities, currency pairs, and other instruments generate returns that outperform buy and hold investing. While investors may be content with an annual return of 10 to 15, traders might seek 10% return each month. Yes, so that is the thing, right? Um, do you do your research? Do you have trust in your bet? Did you buy? Do you hold? Um, do dips matter? Are you looking at your screen nonstop, stressed out whether you want to buy or sell or not? Some people get a rush from it, but yeah, you'll get better returns if you're an active trader and you're really good. Usually, they'll outperform people that just hold. At least that's the idea. And I'll bet there are people on Wall Street that are very good at this. So trading profits are generated by buying at a low price, selling at a higher price with a relatively short time period. Reverse is also true. Trading profits can be made by selling at a higher price and buying to cover at a lower price, and selling short to profit in falling markets. Buy and hold investors wait out less profitable positions. Traders seek to make profits within a specified period of time. and often use a protective stop loss order, etc. As you can see, complexity goes up because the risk goes up, right? Stop losses. I've used it once, I think, just to try it, and apparently I fucked something up with my leverage and I lost all my shit.
I used them in my early days, like when I was still on I told you about this, like this Dutch equivalent of Robinhood in the past. Go to Richard's episodes in the beginning. I used them then, but I would usually just hit my stop loss, and then I would still lose a ton of money. I'm not a good trader, guys.
Yeah. Yeah. And they define it here further, right? So for trading, you have position traders held for months to years. So that could still be right. So let's say you want quant. I mean, this edges towards DCA. You just accumulate what you can whenever you can. Swing traders holding positions for days to weeks, trying to ride the cycles. Just easy, bro. Just buy low, sell high. And then they start off with 10, then they get 10 and a half QNT after one cycle. Then they have 10 and a half to invest, and then they'll make another, but then they make a whole QNT and so on. Day traders hold their positions throughout the day with no overnight positions. Obviously, this is not relevant to crypto because crypto is a 24-hour economy, and trust me, stocks will go there as well eventually, I think, or at least the derivatives will. And then you got scalp traders. They hold trades for seconds to minutes with no overnight positions. And as you can see, the lower you go on this list, the more involved it gets. Trading styles are based on account size, amount of time dedicated, level of experience, personality, and risk tolerance. Yeah, so this is interesting. I mean, we've all seen Wolf of Wall Street, and there's also one with Michael Douglas, I forgot. So Wall Street, I think it's Wall Street. It takes a certain personality to be a scalp day swing trader, I think. I think most people are not made for the high risk, high energy, fast changing pace of everything.
They are for like a couple of weeks or months at best, and then they wander away in huge losses, saying everything is a scam.
Yeah. So if we scroll down to the key differences, right? So the length of time that an investor and trader hold their asset diverges. Noted above, investors normally have a longer time horizon in mind, typically more than a year. Traders, on the other hand, normally hold on to their assets for a short time frame. So the potential for loss is among the key differences between the two. There's a risk of losing your money regardless of whether you hold it for the long term or for a short period of time. But the risk increases for traders for several reasons. They tend to hold onto their assets for a shorter time frame, and they are also more open to holding a diverse set of assets, those that investors may not necessarily keep in their portfolios. This includes futures and swaps. So unlike investing, trading requires a great deal of time, effort, understanding of the market, and research. Many traders are experienced, have a greater sense of how the market works, while investors may also be experienced. A great many aren't. As such, they may rely on the expertise of financial experts, such as financial advisors. So, what's more profitable? Those things I recommend read for yourself. Bottom line, this is people often confuse investing and trading using the terms interchangeably, but it's easy to see why, because there are some distinct similarities, such as the need to open accounts, deposit money, buy, sell assets, but the two are very different. Investors have a much longer time horizon, traders, we all spoke about this. So why did we name this, do you make money while you sleep or do you trade? We chose to do our research and go big on quant. And this is not buying advice, right? I still hold some other tokens that I acquired during the time that I'm in crypto. I'm only here for, what's that, 3 years? But I pretty early on made a decision to research what, and I'm talking specifically crypto, what I am looking for, what I want to achieve, and how I want to do this. And my goal was financial freedom, right? Retire early and take risks, but calculated risks, right? Making an attempt to understand um, what I'm doing and where I put my money in, and put in as little effort as possible. I'm curious then, what was your idea? Was it similar, or
Uh,
for you?
I didn't really. I think my venture point, my point of departure is kind of hard to pinpoint. I think because your goals, your if you have these shifting goalposts, right? So it also kind of depends on where you are at the moment that you start. But I think initially for me, um, it just started out as this game. Okay, so I just want to make more money than I do working. Um, and then like I think my original, I think still my goal is to kind of buy myself my own place, buy myself a house. I think that has always been the main goal, right? To acquire enough capital to kind of be able to do that. And then as things got bigger and turned more lucrative, it's like, okay, um, this might actually be get better. And then it turns into, okay, maybe I can uh, get my retirement earlier than in my 60s. Maybe I can move it towards a sooner point in the future, right? So kind of financial freedom is also for me like the most important thing. But I think my initial starting point was just okay. I want to acquire more capital so that I can more easily buy myself my own place. That has always been my goal. It still is my goal, and after that, I'll see what I do.
Oh,
Do I sound logical? Because I didn't.
yeah, yeah,
You really
it
started.
does.
You really started with a plan. Like you had your well, you had your spending. You kind of budgeted everything you did. I didn't have that specifically because I started investing during my first part-time job,
Yeah.
really being in a way earlier stage in life, just still studying, not really knowing what to do, just experimenting around. So I didn't really have any solid goals unless like, okay, I want to acquire capital to make it easier to buy a house, which is still kind of my venture. It's still kind of my goal ultimately. Did I buy the house already? No, I didn't. There's multiple reasons. Let's not go into that.
Yeah. But okay, so what happened to me was I was invested in stocks, right? I bought a bunch of natural gas, and I owned some tech companies, and I was focused on the dividends, right? I wanted to accumulate companies, businesses, parts of businesses that pay dividends, and then use those dividends to reinvest, grow my portfolio, as a result, grow my dividends, right? The snowball effect. That I did. And eventually I spoke to one of my customers while I was working in that shop. And he's like, no, man, you need to look at crypto, you need to look at XRP. And then my origin story begins. Um, but my thinking was because I knew Bitcoin, and I obviously heard the mainstream news in 2020 of how shit it was and blah blah blah. And then the price went up, and I was like, okay, so this crypto thing is interesting, but it's so volatile and blah blah blah. Stocks are a lot more generally less volatile, which makes them generally also less profitable. But I did my research into XRP, and I just didn't buy the all the money story, right? And this is where um, things changed for me because I was talking to a friend of mine. He was like, "No, you don't want to use, you don't want to get XRP for XYZ reasons. Have a look at this." And I'm a guy, right? And this is psychology, and that's important. I'm lazy. I like efficiency and effectiveness. I want to do as little as possible for as big of an outcome as I can. So I started digging into this quant thing. And if you're open minded and respectful, you can get everything information wise from people. People will DM you and get you up to speed, get you documents, everything. You just need to have an open mind and read. And and I did. And then I saw the patent thing. And then I saw Gilbert's connections and so on, all that good FA stuff. That to me sounded a lot more permanent and safe. A moat, right? A moat is the water around a castle, which I also looked for whilst I was busy with my stock investing. So that resonated with me. Dove in and bought almost. No, back then I went fully into quant within a week or so. Because we'll get to that after the price stuff. I am lazy and I want to be efficient and effective. So I
You're
just grab
also
money and yeah.
no. I mean, you're not truly lazy. I think
No, 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 no,
you,
no, no,
yeah,
no.
but you want the most effective outcome.
Yeah, yeah. I don't want to work. I don't want to work. And
Yeah,
especially I want to work, but for me, for my family, and do the things I love and like. And
yeah,
and
exactly. So
I
yeah,
don't want
I
to
get
work
what you
for
mean.
money, right? I don't want to work for
No,
money.
you want
Time
to
for
work for
money to
yourself. Yeah.
me, yeah, time for money to me is stupid, right? Ever I read the 4 hour work week, that resonated so hard, and since then I never looked back. So I knew trading wasn't for me. That being said, I did look at the charts, and I did make attempts to time bottoms. Right, I bought in close around like 4.5 euros, 4.5 up to like 7, 8, and so on, and then it dipped back. So I made sure that I had capital at the beginning of the month and capital that I had left at the end of the month, and threw that in. And if there were big dips in between, I tried to scratch money from wherever I could and build my position. So I built my position over about a year.
Sell the sofa.
And
We need to buy more quant.
yeah, yeah, but then obviously there came this moment where the entire market went berserk in 2021. And then I also got caught, right? And we had this DGen Ape group that I believe we shared.
Yeah, the
And
DGN ape bit.
the DGen Ape bit. And then I got sucked into the trading. And that's when I learned that trading was absolutely not for me, right? Because then emotions start to become a thing. And yes, the rush when you see something go up, but also the devastation and the panic when something goes down. I mean, I like a good rush. I used to be a Marine for a long time. I thrived on that, but this is different, right? Because this is so far beyond the realms of control with the amount of knowledge and understanding that I had of this market. And even then, right, we're talking crypto now, even beyond crypto, everything, the butterfly effect is not a joke. Everything impacts it. Somebody can just pass gas in a McDonald's somewhere, and before you know, Bitcoin dumps another 10K, and everybody and that just because I cannot oversee, comprehend, understand. I got really lucky because I eventually went into TrueBit and I got in there with like 15,000 euros. And because it just kept going up and up and up that day, I sold a ton of assets, including a little bit of QNT to throw that in there to capitalize on the bonding curve. And then in the evening, while I was celebrating, there was this giant red dildo. And price just went down to like what, 4 cents or something.
Some people lost deep six figures aping into Truebit.
Yeah. I know of a friend of ours who lost multiple three digits QNT, 4 digits. Never. Okay, let's not go there.
Let's not go
But
there.
I managed to recover my losses from Truebit and came out net zero. Took me a week of stress. I actually had to tell the missus, okay, honey, I'm sorry. I made a mistake. I got greedy. And you know that money that we had invested? Yeah. I kind of put 25% in this project. And
There's this.
yeah, something like that, numbers like that. Um, that was one of the hardest conversations I ever had. I recouped everything, came out net zero. Um, but all the other shit that I sold, I did make a profit on. And well, I was really lucky after that because all the assets that I sold at a profit after Truebit went down, they proceeded to tank like astronomically. And then I could buy back more QNT than I had before, which is a pretty crazy story. But I decided to never go there again. Why? Because I was on my phone all the time, and not in a casual way, like I just checked every now and then. We have something interesting, and we do. I have a guest planned for next week, but I wasn't looking on my phone. But that's a relaxed way of checking, and that's a relaxed way of communicating. But the endless cycles in my head, should I buy, should I sell, is the market going down, is the market going up? It just, yeah. Are you winning, Dad? Son, back up your stuff. I just lost the house. Shit like that. And then I thought to myself, but why? Why would I do this to myself? Because I had like a week and a half of pure agony and despair and self-loathing. And I mean, I have kids, and it was like, how did I get sucked in? And that was also the week after that I left the Degen 8 pit because I needed a break, and that was just from like 2-3 weeks of escalation.
Yeah, I mean, I was there as well in 2021. I didn't YOLO that much. I I still had my senses, but I did. I mean, I did follow the hype in certain things. I've lost tremendous amounts of money just aping into stuff. It's not That's not very good for your mental health. Luckily, whenever I always kind of keep sane with these things, I don't
Mm.
start throwing in more and more and more money. Um,
Mm. That's
but
true, but besides that, right? There is no way that someone can trade crypto without a fuck ton of experience and inside information, or at least
absolutely, yeah.
you need to know things, so you need to be on the ball. And and even then, right? Then there's guys that are like, yeah, but I'll just buy top 50 coins, and I trade those. But you'll be behind a computer the entire day, and most of those coins, they will, and we'll get to that in a bit, react very similarly when daddy shitcoin wets his nappy. And that kind of defeats the purpose. So what is left then? And that's what we did in the DGen 8 pit. You look for sub 1 million, preferably sub 250K uh,
Low cap.
gems, in low cap gems in quotation marks. And you just buckshot the hell out of it, right? So you take like 10 bets. Oh, this has a dog icon. Oh, this has a pussycat on it. Ooh, this has a very, very, very dirty name. This can do
50
well.
holders versus early.
If it goes up 10,000 times, then I'll make X. And yes, it works for some people.
Yeah, and then
But
comes the stress because then you buy into it, and sure, if you're at the front end of it, you'll probably win. You will probably come out as a winner.
Try
But
get
then
out.
but how do you get
Right.
out? Indeed, like I, well, bit
A
little bit
coin
about
can
myself.
go to 10,000 with 10,000 supply. That does not mean that if you own 1,000 coins, you can get your 10,000 out.
No, you need the
It
liquidity.
You need the liquidity, and everybody's fighting for that liquidity. And those tokens make the gains, but you just can't get out. And if you can get out, and I also did this, I once paid 700 euros of ETH fees just to get
Insane.
the fuck out of some project. It was a good trade, made money out of that, but man, just the agony, the sheer agony and the stress, not for me. It requires a special kind of psychology. I mean, we are still in a similar spin-off group of the Degen 8-bit, and there are people there that love looking for the next token that you can scoop up really cheap, and they share their earnings from time to time, and sometimes like, oh dude, wow, that's so amazing. And then there's always the same two, three people, send me the ticker. And they will try and dive in as well. I mean, it's also looking for a rush, I think. I'm not sure. And there's arguably a lot of people that are really good at it. I just don't think you find those people in Telegram, because
No,
if you're really good at that, why would you be there? That's very altruistic. I mean, it could be, but yeah.
yeah. I think the people, those low cap gems, so to call it, the ones who win or they have insider information, they were informed earlier, they were invited to certain pre-sales that you weren't part of as being member of the public.
And the risk is for the longer term, do you
Yeah.
get out? Can you get out? Or is it quote unquote an addiction? I know I am addiction prone, but I am also very stress averse. I don't like stress anymore. Try to limit it from my life wherever possible.
I actually
Um,
got out today out of a certain coin. Like, I'm not gonna name anything like it, but I was kind of happy. I didn't tank the price. It was very actually worth. Like I put in these. So you have certain ways of selling, right? So on an exchange, you can go for the market buy or the market sell, where the exchange will just forcibly sell your crypto at that price. If you do that, you run the risk, if there's no liquidity, that you will just tank the price, lose money there. And so I went for a limit
yeah,
order.
slippage, right?
So, yeah,
Gaps in the
exactly.
order
You,
book.
you have to slippage. It will tank the price. You will get a lower reward. So I just used limit orders and had some patience, and that actually worked. I was really happy with it. But it gives you
Yeah, that
stress already in a kind of a well-known coin that's
yeah,
has not too bad liquidity. Even there,
that's also how I got out of my TrueBit conundrum by just placing limit orders. I was active at my computer, but just tried and looked for the liquidity and such. But if we're then looking at quant, right, and this is where things get a little bit difficult for people, because if you can buy a token now, you can research what the purpose of the token is or what the company is, um, what is their position in the market, and who are they tailoring to, right? Then you can also derive a time horizon for expected profits. Not gonna lie, back in 2020, I really thought that by 2021, Quant will be at 1,000. Um, and since then, I learned a lot, because those short time frames trying to predict prices, that's just ridiculous.
you
It is
can't do
just
that.
it is
Don't try to
naive.
do it, guys.
It is childish. I mean, Roll Pal and people like him, they're not bad traders, right? You can say of Roll Pal whatever you want, but he's not an idiot. Man is very wealthy. Man built a very, very healthy business. He's not an idiot, but he also got caught up in overconfidence. And the market is the market, and things happen. But still, I am 3 years in this crypto thing, and I am still in profits. Well, and in the meantime, like say the last year and a half, I've been slowly DCAing out, not with the intention of going into fiat, but whenever I wanted something or we needed something, I just got it from some profits, whether that was um, at 100, at 200, at 300. And I ran some numbers and I realized that I just about got my initial out over the duration of a year and a half. And yes, I have no money in my savings account, but I did get a nice car that I needed. I got an upgrade for my computer, a nice little microphone, and some other stuff. We had a couple of holidays with the family. And because I just DCA'd in the beginning, my average buying price was pretty good. And my average exit is so far also pretty good. But my investment horizon was initially at least 5 years. Um, there's still like 2 years left for that. I still feel we're going to make those targets. It's been pretty relaxed. Besides all the shenanigans that I just spoke of, it was pretty uneventful. And it feels, I'm using this word intentionally, like there's good times coming.
Yeah.
But based on what? And we're gonna have a look at the quant price. We're gonna have a look at what trading could have gotten you, and then we'll go on to Monsieur Buffett's thing. Tim, do you
Yeah,
mind if we
sure.
take like a 5 minute break?
I do not actually. Oh,
Tim in a panic. I thought I'd wake him up a bit. Now we had a wee little break. So I'm looking here at the good old Coingecko. And what you can see here is Bitcoin is at 25,000,
we are
25
not
and a half thousand.
seeing anything.
You are right. Wake up call for me as well. Bitcoin, 25,500 euros. Last 7 days, there's a little 5% gained. If we look at BNB, has a very similar graph, same as ETH, pretty similar also for XRP, Cardano, Doge, right? They all move when the rest moves. And why is this interesting? So if you look at this, right, there's little nuances, but generally Daddy Bitcoin leading the way. In this case, ETH, it seems leading the way. And the rest just follows. So how can you capitalize on this as a trader? You have to be glued to your screen and you need to be scalping, right? Because in a day, these are pretty volatile things. This requires you to be at your screen the entire time. Timing this, the highs, the lows, well, if you find it, you're going to be one of the first because there's also bots, market makers, algorithms, God knows what you want to call it, but they know more than you. They have lower latencies than you, and they have a lot more data, probably, than you. So you will always be late to the party, and you will most likely not consistently time the tops and the bottoms. Does that mean you cannot make money? No, you can make money, but you will be behind your 1, 2, 3, 4, 5, 6, 7, 8 screens, getting a nice little tan, sitting in air conditioning if you're lucky, and hoping you get a bunch of good calls. But as you can see on the graphs here, and I'm just going through Coingecko for the people on the podcast, it's all the same, right? The last 2 days, give or take, everything went up just a bit. After it declined like the day before, until 3 days prior, right? So midweeks. All the graphs are pretty similar. There's a couple of exceptions. We have Stellar here that doesn't play ball. We got Avalanche that's not playing ball. OKB, don't know what it is. They have been going up consistently, almost 30 degrees, which seems nice. But how do you know? How can you find that out? Now we have Quant. It's also not doing really well over the last 7 days, and so on. Looking at Quant, we are right now at 85 euros and 75 cents. Looking over 7 days, it's give or take net zero. So there is a lot of potential here for trading, right? Looking on the 16th, one at night, we were at 88. And that same day, the 16th, at 1500. So that's 14 hours later, we were down back to 85, right? So if you have a decent bag and you were awake one at night, or maybe 5 in the morning, you could have sold a top and you could have bought back either that day or until Monday the 18th. So that would have given you 2 days to make a trade. But it looked like it was going down and down and down because it's lower lows and highs. And then you get into the TA, and that's a whole study in itself. But if you're good at it, I mean, there's a lot of spikes in the quant graph, and it seems to gravitate to ranging for the last periods, right? Like in a certain range. I mean, could be profitable if it's worth your time. But there is a risk, right? So if you, right here on September 8th, if you would have at 94 euros bought a bunch because you thought we were going up and you panicked on Monday 11th, you would have lost 10 euros per QNT. Depending on the size of your stack, that can be a lot of money. And I know I'm dumb as fuck when it comes to these things. That's why I don't trade. But looking at like max, I bought here somewhere in beginning of June, end of May. Yeah, €4.30. And if we put it to log, then we did pretty well. That's still a moderate 20x with very little stress.
Yeah, I mean, about somewhere like 5 months later.
Yeah, it's around a tenner, 10 to 40 probably.
Yeah, exactly. Yeah.
That's still a nice 4x that you have right now. On average?
Yeah, on average on QNT. Then, as I said, go back to Richard's episode, I already had multiple, like I already had my profits and they rotated into QNT.
Yeah.
See? So I didn't start there. I started in 2019. 2020. Sorry, I started in 2020. A couple of months before Jarno started, just in different cryptos.
There is a thing to be said for trading, right? Because right now we're in the bear market, and bear markets are a very good time for making money, right? So if you can now find assets you want to hold, you should buy them. Could it go lower? Yes, we'll get to that in a bit. Historically, will it go up again? Depending on what you're buying. If you're a trader, you are kind of in control throughout the cycle. If you have the balls and if you have the money, because there's always going to be volatility, and especially in the bear market, volatility will be king, because there will always be hope, there will always be fear, because people trade emotions, and good traders generally less than inexperienced traders, but all people have emotions, and especially in crypto, there's a lot of idiots around. So as a trader, you can make money if you're willing to make the hours, be awake. I've read the stories of people are actually with their missus in the bedroom on guard duty to watch the laptop because it might just fall apart and then we need to sell, right? Stuff like that.
That's
That's not for
insane.
me. Yeah, and I mean, yes, you can
No,
use stop losses and leverage and
I have everything programmed. I got some notifications today that my orders were hit. I was like, "Yay! I made money."
yeah. I mean, that's a thing. But imagine doing that week round, and that's your way to accumulate
I
your
couldn't.
wealth.
I could never.
No, it's also not for me. But I mean, there's people that do, and I think you need to identify for yourself who you are and why, and yeah, look especially for the longer term, right? And because that's what we're looking at. Because most people we know are holders, right? They buy, they hold, and on June 16th, 2023, this article was updated last. This is on trading212.com. Link is in the description. They analyzed Warren Buffett's rules for investing. And the introduction is as follows. Warren Buffett has one of the best and longest investing track records ever. Fortunately, over the years, he has been happy to share many pearls of wisdom that help explain his success. Here are the 20 the most important. So we picked Warren Buffett because he is one of the most well-known investors. He, Charlie Munger from Berkshire Hathaway, but also Kevin Lynch. There's a couple of other legends out there. They have a strategy that they devised and it just works, right? Doesn't have to work for you. Some things worked in the past. Maybe they will not work in the future. I mean, everything takes time and effort. These tips are really interesting. And what you will notice is that most of these tips do not work for crypto. And we'll show you why. So they have some big ideas. He has some big ideas. So Warren Buffett is one of the best investors of all times, making him somebody every new investor should want to listen to and emulate. Buffett's rules for investing are straightforward in theory, but most people need help to apply them. Emotional investing still reigns supreme. These investing rules remain powerful despite changing market conditions. They contain timeless wisdom and common sense without complex jargon. And this is a nice quote. What the wise do in the beginning, fools do in the end. It's pretty funny. The Oracle of Omaha has overseen a 19.8% average annualized return on the company's Class A shares. Okay. So that is nice. That is 20% profit every year,
That's
right?
absolutely insane. 20%
Yeah,
per year on average
yeah,
since the
yeah,
1960s.
yeah, yeah. And
It's a ridiculous
if,
amount
if
of money.
if you take into account how that has grown his portfolio, right? So if you begin with 100 with a 20% return, at the end of the year you have 120. And if you index that, let's see, compound interest calculator. Yes, this is a tip. So if you go to investor.gov and your initial investment is 100, your monthly contribution is 0. The length of time in years since 1965, let's say 60 years. And the estimated interest rate, he did it at 19.8%. The variance is 0, and the compound frequency is annually. He will now have in 60 years $5 million. $5 million. Now you can see it on the screen here. So if you start 60 years ago with $100, you don't put any money in a month. You let it sit for 60 years at 20%, and you get it compounded annually. You will have $5 million in 60 years. Yeah. So that's huge. And he did not start with 100. Huh?
No.
And he added in between, because most dividend shares and Warren Buffett is a big fan of dividend stocks. They sometimes pay out every month, some every quarter, other 6 months or a year, and you can just reinvest those. Yeah, Tim.
No, I mean, getting 20% is just mind-blowingly good. I think usually if you take like 5 to 8%, you're doing well.
Yes.
20%
So
is a ridiculous example.
savings interests are next to nothing. And I believe the average S&P gain per year is, I believe, 8%, something like that.
Yeah, exactly. It's like 8%, which is still really good.
Yeah. But this compound interest, this is what happens. It's exponential gains. Funny story on my end. My mother died when I was really young, when she was 9. And as per law, I am then entitled to a certain percentage, 1/3, because I have a sister as well, of the inheritance. But that is then calculated at that time. What is the wealth of the family at that time? And then there is an interest marker tied to that. And the marker for us was 7.25%. That ran for 30 years when we calculated it this year. And I told my dad that the amount of money back then, I'm just going to say it was calculated to now, it was about 7,000 euros. And that was now worth 57,000 euros on a 7.25% interest rate. My dad was like, no, that cannot be right. And I showed him this calculator. I'm like, dude, I am not doing the math here, because he knows my math. This is just a computer. And this is how it goes. And what happened, like the first year, it's tiny, right? But now 7% over 57,000 euros every year, that adds another 3K. So next year it's 60. And then you need to apply the 7.25 to the 60. And then it's not 3K, but then it's like 4K. And then it's 64. And the line goes just up from there. So, yeah. 19.8% what he made. Crazy numbers. So, rule number 1. It's a very comprehensive one. Don't lose money. Buffett is a pretty risk-averse investor, which might seem a strange thing to say about the world's greatest financier, but portfolio protection is the first step towards wealth. Rule number 2, don't forget rule 1. By investing in great companies, preferably when they are trading at a steep discount, Buffett cautions never to take unnecessary risks with your capital. Always have a margin of safety. That's rule number 3. Yeah, and this is already where crypto does not meet the spec. Yeah, and we're talking, okay, let's say we're talking 2030 and Quant is worth 5 figures. Let's be very conservative. That would mean for a lot of people that they will have $1 million or more available. I would say that would be a good time to spread your risk a bit and diversify. There are people that say, oh, then I put a little bit into ETH, and I put a little bit into Bitcoin, I put a little bit into XRP. Well, trust me, a couple of those will not exist in 2030. That's number 1. Then you have seen the graphs that we showed you. Everything is correlated with each other. Everything. If Bitcoin shits the bed or Ethereum shits the bed, it pulls the rest of the shit show with it. A margin of safety. The difference, this is the difference between the fair value of a company and the market value. What is the fair value of a crypto? Tell me, how do you derive that? How do you apply that generally? How would you say that a specific crypto coin is better than another? Most of the owners are anon. Most of the markets that they are dipping their toes in are so nascent. You cannot derive any reliable information. So you have no foundation to start with. The lower the market value relative to the fair value, the greater the margin of safety. The rule stipulates that the less you understand about the business, the larger your margin of safety needs to be if you plan to invest in it. Yeah. So the lower the market value relative to the fair value, how are you going to derive that? You don't know because you don't know generally what the coin targets or whom are going to be interested. For stocks, you can. You can actually look that up. I'll put the link to this in the description as well. It's called Seeking Alpha.
So Seeking Alpha, yeah.
It's brilliant. It's free and it works. And yeah, they're probably annoyed because my VPN was this to ensure that it's up in the future and I would JavaScript to your browser. Yeah, okay. Whatever. Just click the link, bro. It's fine. Yeah, but Seeking Alpha market analysis, you can literally find anything. If you look here at Tesla, you can click on Tesla. I'm now clicking on Seeking Alpha. You can see the price. You can see the ratings. If you want to look up dividends, it doesn't have them. But you can find everything, give or take. Some things are obviously locked because they do want to earn money. You can look at the growth. There are ways you can find all the earnings reports and shit. This is a very good resource.
Yeah, it is.
So with that, you can derive actually what is fair value because you can see what is the PE, what is the EBITDA, right? So that's the earnings before interest, debt, blah, 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 all those things. You can find that and you can see what a company should be worth. There are rules of thumb for that. Crypto, not so much. So find companies with good financials. Yeah, that's akin to my previous point. Go to something like Seeking Alpha. If you want to do this yourself, look it up. Look at the income statements. These things for public companies are public record. You should be able to look at that. For crypto, yeah, it's going to be a little bit difficult to find the financials, even for Quant. One of the main fun things right now thrown in our face by Linkies is, yeah, but Quant is broke because they had no money in 2020, so they have no money now. But you can find this online. Annual profits, total sales, vital metrics. Then we got rule number 5. Find companies with good earnings, right? So if the stock price goes up, then you got, here, I'll just read this. Buffett looks for companies with a strong history of earnings in the 5 to 10 year range. This is important. He is not concerned with quarterly earnings because he believes this short-term outlook is a bad attitude. Company with small profits and small earnings that is only 2 years old will not make it into Buffett's portfolio, right? He is a value investor. And in the future, if you want to safeguard your money, right? Because crypto will not live forever, quant will not live forever. You want to look at businesses that have been around for a while, especially if you want dividends. A company that just that exists for like 5 or 10 years will probably not even have dividends because to pay out dividends, you need to have excess cash. And a startup that's a company that exists for fewer than 5 to 10 years does not have that.
There's no way.
I mean, there is a way, but it's not the way generally how businesses are built, right? Most businesses take on a ton of debt so they can grow quickly, and they either make it or they die.
Yeah.
And it's like move quickly, break shit. That's the strategy, and that's what a lot of software companies do as well. Just move quick and break shit, because if you break something, you can improve, and then you have results. If you keep testing and testing and testing, you'll never go to market, and somebody will overtake you. That's also why there are NDAs. But that's another topic. So look for consistently high returns on equity. Warren Buffett focuses on the return on equity more than the earnings per share. This shows a focus on increasing business value instead of speed of earnings and growth, right? A company can, for instance, Tesla, it took a while for Tesla to be profitable. Amazon,
Yeah.
same story.
I'm not sure if Tesla is profitable already. They might still be making losses. Uh, but I don't know. I know nothing about Tesla.
Yeah, can't be bothered to look it up now. But
Can't be ours.
yeah, you can find all those things. But a company, for instance, Amazon, very famous meme, crypto bros know this. The stock is not the company, and the company is not the stock. Stock price can go down, but if all the internal metrics are going up, then you get the discrepancy that they talk about here, right? Margin of safety. If all the metrics for the company go up, but the stock price goes down, look at Quant, Biz News, City News, Nexi, all those things are a given. But Quant price is still bleeding a little bit. Does that mean it's a shit company? No, it just means that the price goes down. Yeah, the return on investors' capital, that's rule number 7. The return on invested capital is an important metric for quickly gauging how well a company generates returns proportional to its investment. Okay, this is a formula. I'm not going to dive into this. Look this up yourself. But yeah, because otherwise it's going to be a very long show. How are you going to gauge this for crypto? Same for the past one. Look on consistently high return on equity. How are you going to gauge this properly? How are you going to anticipate this, right, in the preliminary stages? Because most of the companies don't exist long enough. They don't have transparent finances. The only thing we have is the charts that are different on every fucking exchange. What are you going to do? How are you going to look at a company while you're in an earthquake, while there's a hurricane going on with an incoming tsunami? It's not going to work. There's no steady foundation. There's nothing to focus on. Is it conservatively financed? You're not going to find that in crypto. You cannot look that up. Does the company earn more money than bonds? What is a bond, Jarno? Well, bonds are technically debt that they sell. So they get money, and it's another form of stock, right? You buy someone else's debt, and there's a annual interest on that. You have 5-year, 10-year bonds, and so on.
Yeah.
That is really, really safe to invest, but it can also be very, very detrimental because it's often not as easy to get out of them. Also, different episode. But yeah, bonds generally more safe. Back in the day, 60-40 portfolio was advised for medium risk, right? 60% stocks, 40% bonds, because if stocks go down, bonds go up, and that is then your hedge. But yeah, bonds are generally better than crypto. But yeah, bonds could be a very nice, but this is also a different episode, way to diversify. Does the company
if you're
have
a
an
real slow time investor?
Yeah,
Right.
I mean, but
If you have
if you have 5
but
to 10 million, you could very well just put 10-20% in bonds.
Yeah, the thing is with bonds, though, these inflation rates that we've seen
Hmm.
last couple of years, I'm not sure about bonds. Like with the amount of inflation, you're now it
The
will be
inflation
okay
was
because
short term, though.
true. We've had this really interesting scenario where the interest rates were really low. We had peak inflation. Now it's interest rates are going up again, so now it might be profitable again.
Inflation now is around 3%.
Yeah,
And in
it's okay.
October,
Yeah.
high was 14.5 last year.
So yeah, then
But
you're actually losing money on bonds.
yeah,
Hey,
yeah,
but back to the
yeah.
article.
So uh, this was for me the most important thing. Rule number 10: does the company have an identifiable, durable competitive advantage? Right. So Buffett likes to understand what sets the business he invests in apart. Having a competitive advantage in its industry for a period of 10 years or more demonstrates its durability. This is particularly relevant to technology stocks, which can be rendered obsolete if a rival company comes along with a superior product. Companies in industries with high barriers to entry are often a good buy, or ones with a stranglehold on the market, such as Gillette or McDonald's. No rival company is likely to take over from them overnight. Yeah, so this is a part of the moat of a company. Um, the thing that it does is that special. Is it relevant in 5 to 10 years? And can somebody else steal their lunch? Right? Quant for me fit this perfectly, rather than XRP, which just tries to be money. Do you understand how the product works? This is also interesting. Yeah, a lot of people think in crypto that they know how this works. I don't even think I understand how Quant works anymore.
No, I confess
We
I do
spoke
not
about
really
this,
know.
and we are the portrayed quote unquote experts. Well, trust me, crypto knows very few experts, and we are not two of them. Do we understand how it works? We thought we did. Do we know now? Anyway, rule 12: avoid companies that might be obsolete in 20 years. I am pretty sure Quant will exist in 20 years. I am not so sure if the token exists in 20 years. Bitcoin? Bitcoin will exist in 20 years, but it will not be worth 10 million. I do not see it. Same with Ethereum. Will Ethereum exist? I don't know. The more we let democracy rule those projects, the slower it will evolve. That's why there are so many forks. And every time that happens, shit just gets split up and eventually, I mean, the trouble it took Ethereum to move to the proof of stake, Bitcoin, the proof of work, will it persist? I don't know. You want to put your money where your mouth is? I don't.
I'm not
But
sure. No.
try and
Um,
gauge this for crypto in general.
I think crypto in this sphere will be around in 20 years. We just
Will
don't
it
know
though?
what.
Will it?
No, it will be around, but not in its current form.
Yes. I think that everything that we see in crypto right now, that will just move to exchanges under the same laws. We know Micah is coming. And the the crazy innovation that was going on in the last 3 to 5 years, that will be gone because it will not be so easy to source money anymore. And because of that, a lot of people will not start anymore. So there will be fewer, well, let's just throw this against the wall and see what sticks. As a result, there will also be fewer scammers. So there will probably be more capital left over for better projects. But the barriers to run an ICO will be very, very, very different. So getting money for nothing, that's going to be difficult. So
I think it's just like let's put it this way. I think crypto will exist. It will just be with different products than we have some right now. I think tokenization, for example, is something we've barely capitalized on.
yes, but that will be
And that
ran by already public companies.
yeah, but like
Because
true,
they
but
let
like
us fuck around. They let us get screwed over, and they will take the reins.
what I'm trying to say is that I think that established companies will issue their tokens on crypto markets, right? So you will have shares on like traditional stock markets, but you will also see that utility tokens from certain companies will enter the crypto sphere. I think that is what will ultimately happen, so that you have
Right.
all those kind of startups that we have now. The vast majority, 98 to 99% of them will fail. We have around 10, 12, 20,000 crypto tokens at the moment. I don't even know. I don't want to look it up. I want to finish the show in the next 15 minutes.
10,000
It's
here.
probably 10,000. Yeah. Um, I've made this argument quite a couple of times, and I'll do it here right now again. We will see maybe max 100 to 150 tokens at the end. Maybe a bit more, could be. But there will just be a very limited amount of companies that be in this market. Look at what happened with the dot-com bubble.
Yeah.
Now the entire internet thrives on Google, Amazon, Facebook, uh, certain Microsoft services Jarno was scolding about earlier this evening. Bing. Uh, you will have certain other companies in that space, but it are like 15 companies max. And they're all under umbrella companies, right? So YouTube is part of Google, Instagram is part of Facebook, etc. I think the same thing will happen with crypto.
Yeah.
We will just that time
That could
play out,
be.
and then the question
Yeah.
is, will Quant be part of that?
Yeah.
I think so.
Yeah. Yeah. That's an interesting point. It will probably still be a segregated thing, right? Digital assets versus the stocks. I think the stock markets will obviously also digitize, but yeah, it could very well be that if you look at where uh, the tokens are traded, that could remain the same. I'm just saying that the way tokens come in existence now, that will not exist anymore. I think
Absolutely.
we agree on that. Good. So if a company does well, the stock usually follows, says Warren Buffett, which is something I pray for every night. Does the
Yeah, but
company allocate
that
cap?
doesn't. I sorry to
Oh,
interrupt
go
you.
go go.
I want to finish as much as you
Yeah,
do
yeah.
as well. Like that doesn't necessarily mean that the stock will actually follow. Like you can have a great company, but also if you look back 20 years in time, you could have shares in Microsoft or Oracle or some other companies, and it took them almost 15, 16, 17, 18 years even to break even to their highest point of that bubble. So yeah, the stock might do. You might have a great company, but there are nuances here.
If
But
a company
I
does well, the
do
stock
agree, though.
usually follows.
Yeah, exactly. Just
Yeah.
pay attention to the word usually.
Yeah. So does the company allocate capital completely in its realm of expertise? So this is also an interesting one. For crypto, you don't know this. And you can know this obviously for stocks. You can find that probably on Seeking Alpha. So what are they investing in? Are they investing in their main vehicle and their main products, or are they just beating around the bush, fucking around with God knows what? Um, Here, this is sometimes referred to as diversification. Yeah. So if you're in quant and you're putting it in something else in crypto, you're not diversifying, you're diversifying. I love it. This is going to be my new thing. Um, so rule number 14 is the company free to raise prices with inflation. This is an interesting one. Not relevant to crypto at all. I'm not going to dive into this. Are large capital expenditures ahead, right? Think servers, think rules and regulations, think exchange listings, all these things. How do you know? How do you know where can you find it? And this is a funny one. Buy at the right time, Tim. It is entirely possible to purchase an excellent company at the worst possible time. The stock market tends to move in unison a lot of times, so that you could be buying before a market crash. The stock might be priced very high for various reasons that do not reflect fair value. So always look, enter nearer to the lows than to the highs. This is what Tim said, right? If you buy in the bubble, at the top of the bubble, yeah, it could take you well over 15 years to recuperate your losses. Or if you're in crypto, it will not recover at all. Is the company actively buying back its shares? And this is an interesting one because VXV is actually attempting this, and Quant is doing this. VXV, this is not the endorsement for VXV, but they were talking about buying back, because they have a very small supply, their tokens. Companies buy back shares as well, right? Because the company raises money by putting out shares, so they're selling bits of their company. You're the owner of a bit of a company if you own the shares, unlike with tokens. Companies, when they have excess cash, they buy back their shares, right? So if you buy back the shares, you own more of your company. That testifies to your faith in your company, your belief in your company and the strategy. It's a bullish signal. And buy simple businesses. One reason Warren Buffett will 18 is that enterprises will change management over time and often into the hands of people less competent and with less experience. But simple businesses are harder to mess up. Yeah, that also makes sense. And 19, be a long-term investor. Long-term investing is the core ethos. The longer you hold onto good stocks, the better your returns will be. This removes the problem of short-term volatility, may cause investors to buy at a high and sell at a low. Time is your friend of the wonderful company, the enemy of the mediocre. And the best time to sell is never. And I love this one. Buffett would prefer not to sell his stock. He just accumulates more, earning capital gains and dividends along the way. With good stocks, the longer you hold them, the more there will be value. Most of the time, this will not be possible because it is a short list of companies that consistently perform over the long term. And a good example of this is Coca-Cola. That was one of his most famous things. He bought when it was relatively tiny. He just held on to it, never sold a share. And that just keeps accumulating and it keeps accruing value. And that is because of our inflation economy, ladies and gentlemen. And you can curse at inflation whatever you want. But if everything is tied to a gold standard, your stocks will not go up. I mean, it's Bitcoin, global reserve. It doesn't work, doesn't add up. Because then the entire economy that we've built stops working. And yes, you're of the opinion that it doesn't work now. Well, that's on you. Wrong show.
Yeah.
Bye. So
okay. Just a short recap. Like 1 hour 45 minutes in, 43 minutes.
Oh man, I did it again.
Basically, just stay Quamfy. That's what we're trying to say. Yeah, and
think long term. Make rational decisions based on as much data if you can get. And if you cannot find data on whom are the customers, what are they solving and why, who is using it for what, and will that be relevant in the next 5 to 10 years? And you hold Quant right now and you're looking for something else to put your money in and you cannot answer these questions, hold on to your Quant. There will come a time, we still hope, that you will get returns on your QNT one way or another. Either exchanges will offer gateways, we get gateways, Um, or maybe there is some other way, shape, or form where you can get a return that you can
Yeah.
reinvest, maybe lending, maybe something else. But what is to me a certainty is that with the low supply of tokens, it is a near mathematical inevitability that qual will go up.
Yes.
And
And we also learned that you shouldn't put all your eggs in one basket here. So,
do we?
yeah, I'm not sure if he actually mentioned that.
No, you did not.
Rewatch the show. You've had 1 hour 45 minutes to see if we actually said that or not. Yeah, I'm done. Really,
Yeah.
it's been a
I'm also
long
tired.
episode.
Make sure to check the description of the video. Look at the compound interest calculator. Have a look for yourself. Check Seeking Alpha. Make sure to look at investing.com for just general advice. And this is inflation, and nobody gives a shit.
Yeah.
Thank you for watching. Next English episode will be on October. Will be recorded on October 2nd and will be aired on October 4th, 5th, somewhere there.
Yeah, something
And,
like that. Yeah. Let me
we have a
see.
guest. We will have a guest, and he
October
is
5th.
yeah, he's a very Quamfy comrade, and he actually will be sharing his journey, and he will be explaining how his QNT journey within the community and his gains have helped him. That narrows it down by about 1%. Because 99% of our viewers and whatever are male. How it helped him to get to where he is right now, what he's doing. It's going to be interesting. Tim, thank you for being
Thank you
back
too.
and for sharing in the conversation. I've been talking a lot once again.
Your monologue.
Oh, and I tried so hard to keep it small. Only 2 topics. Yara, you
Yeah,
got
well,
this.
I think it's.
But then Ireland came along, and that's where we lost like 45 minutes.
Nah, we lost. Usually we take 8 minutes for introduction. Now we did 16, 17, so it was double the time. We also got lost in trying to recap a 2 hour Dutch episode in 5 minutes. Yeah, that's difficult.
We're learning. We're getting better.
Yeah, but I think we still made a great show. And if you did, please leave a like, a comment, or just hit something on your Spotify screen
We
or
would
whatever
love it if
podcast
you share it on your socials.
streaming app you use. Just share it, interact. That would really help us forward.
Yeah.
So I can go to other places in Europe and have more drinks with listeners.
Yes.
So that would be actually great for me. So
spread the Quamf, ladies and gentlemen.
Exactly.
And we will see you in Dutch next week and in 2 weeks in English.
Yeah, we'll see you later. Stay Quamfy.